Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis and insights. Today is October 29th, 2024, and we're diving into the latest earnings report from Regency Centers. Joining us is John, our Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Regency Centers, a leading owner and operator of shopping centers, has just released their third quarter 2024 results. There's a lot to unpack, so let's get started.
Revenue and profitability overview. Let's start with the financial highlights. Regency Centers reported a net income of $98.1 million, or $54 per diluted share, for the third quarter of 2024. John, how does this compare to last year?
Regency Centers has shown a solid performance with a net income increase from $89.1 million, or $0.50 per diluted share, in the same period last year. This growth is reflected in their NAREIT FFO, which rose to $1.07 per share from $1.02, and core operating earnings, which increased 3 per share from $0.97. These figures indicate a robust financial health and effective cost management.
Operational efficiencies and future outlook. Despite the competitive retail environment, Regency Centers has managed to increase its same-property NOI by 4.9% year-over-year. What factors contributed to this growth, John?
The increase in same-property NOI is largely due to a 2.7% contribution from base rents and a high occupancy rate of 96.1%. Regency's strategic focus on grocery-anchored shopping centers has driven tenant demand, allowing them to execute 1.8 million square feet of new and renewal leases at favorable rent spreads. Additionally, they've started $100 million in new development projects, which bodes well for future growth.
And what about their outlook for the rest of the year?
Regency has raised its 2024 guidance, with NAREIT FFO now expected to be between $4.27 and $4.29 per share. This reflects their confidence in continued strong performance and strategic investments.
Strategic initiatives and capital management. Regency Centers has been active in acquisitions and capital management. Can you tell us more about their recent activities?
Certainly. Regency acquired 2 grocery-anchored shopping centers for a total of $47 million, enhancing their portfolio. They also issued $325 million in senior unsecured notes, which will mature in 2035, to optimize their capital structure. Their pro-rata net debt to operating EBITDAR stands at a manageable 5.2x, and they have a substantial $1.5 billion capacity under their revolving credit facility, providing ample liquidity for future opportunities.
Leadership insights and market position. Lisa Palmer, Regency's CEO, mentioned strong operating fundamentals and robust tenant demand. How does this position Regency in the market?
Regency's focus on grocery-anchored centers has proven resilient, with strong tenant demand driving occupancy and rent growth. Their strategic investments in development and redevelopment projects are set to enhance their market position further. The leadership's positive outlook for 2025 suggests confidence in sustaining this momentum, supported by a growing investment pipeline.
Key takeaways. In summary, Regency Centers has delivered a strong third quarter, with significant growth in net income and raised guidance for the year. Their strategic focus on grocery-anchored centers and robust leasing activity are key drivers of their success. John, any final thoughts on Regency as an investment?
Regency Centers is well-positioned for continued growth, with a strong balance sheet and strategic investments in high-demand properties. Their raised guidance and successful leasing activities make them an attractive option for investors seeking stability and growth in the retail real estate sector.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Regency Centers' performance in the comments below.